have your this recorded and wish to participate in the recording, please either exit now or mute your camera. I don't think you mute it, you turn it off. So moving on, so thank you very much for attending today. My name is Scott Johnson from Catholic Super. I am a relationship manager based in Melbourne, looking after the western area of Victoria. I also have online some colleagues, but predominantly my colleague Georgie from Western Australia. So thank you to Georgie and the West Australian participants for getting up bright and early. We also have Kelly up in Queensland. So we have people from all around the country. So thank you for accommodating the different time zones. I will move on. So again, the housekeeping, please put your questions in the chat. We will get to them. If we can't answer them today, we'll get back to you. There were some pre-submitted questions and we will answer those. So without further ado, let's move on. There we go. All right. So quick disclaimer. So this is general information only. Now, whilst this is employer information, we're not talking about products or services, etc. Please, if there is anything of interest that you need to do some further research, go to our website, check out the product disclosure statements. Also, we will be talking about a clearinghouse. So there is some product disclosure statements for the clearinghouse. But please, anything you're not sure of, put it in the chat or raise a question with your relationship manager. Okay, so the agenda for today, this is about Payday Super. So hopefully you're all excited about Payday Super and you are aware that it's coming. But we're going to the timeline, what the legislative update is, probably some of the new definitions. So qualified earnings is a bit of a new term. SuperStream 3.0 is hopefully some of the technology which underpins some of the improvements that we are hoping to deliver to members and also to yourselves, and then finally what you need to do to get ready. All right, now this is quite exciting if you work in superannuation. Look, a lot of the preamble is really what's been leading up to this, but the key thing is that in November this year, the Senate and the House of Representatives finally passed the legislation and it has received royal assent, so that it takes effect from 1 July 2026. So we have not heard anything about anything being deferred. So realistically, it's time to get ready to make sure you are ready to go from 1 July 2026. All right, why Payday Super? What is Payday Super? Well, the key thing first and foremost is really to help the ATO tackle unpaid super. I've seen different figures, but anywhere between 3.4 billion and 5.2 billion is not making it through to members' accounts within the relevant timeframes or at all. So I was going to really try to help the ATO improve their compliance and policing to make sure employers are doing the right thing for their employees. Now, this really doesn't apply to many of you. Most of our Catholic Supers employers are very vigilant and good at getting things done, but certainly anything you can do to improve the outcome. And then that really flows on to the next part. Employers currently have the obligation to pay quarterly. Most employers pay at least monthly. The realistic thing is that the sooner the money gets into a member's account, the sooner it can start working for their retirement. And for a 25-year-old, that's been forecast to be an improvement of about 1.5% overall by the end balance at retirement, or about $6,000 extra. So, you know, $6,000 in today's terms, it's quite a nice holiday. It might still afford a few airfares. So it really helps the employees get better bang for their buck. But then other things, it's transparency. So it helps the members keep track on their contributions, but also it just helps, here's a note here, protect insurance benefits. So sometimes if contributions aren't coming through for a member within a certain time frame, it may expose potential insurance benefits because they become an inactive employee and they may lose important insurance. So there's a lot of things. It's really aimed at making what superannuation is intended to be, which is helping members, employees and workers in Australia save their retirement and protect themselves. Okay, so the timeline, the key legislative highlights. The first thing is the date. So 1st of July 2026, by 1st of July 2026, you will need to be aligning your superannuation payments with your payment of salary or wages. So for many people who pay fortnightly, you'll need to bring forward the frequency of your payments from monthly to pay within 7 days, and I'll get to that, of when you pay your salaries and wages. And I jump ahead, but the timing does matter. So it really does come down to that within that time frame, you need to make sure the employee's superannuation account will be ready to allocate contributions you have remitted within 7 days. So you have 7 days to go through your process and make sure it is in the account of the superannuation fund, so then it can flow it through to the individual members. And the other big thing now is that if funds cannot be allocated, the super fund that is receiving the money must send it back to you and let you know why within 3 business days. And business days is the important thing, and I'll highlight what the definition of that as we go on. How are we going, Georgie? Are there any questions so far, or is everyone so riveted and waiting for the next bit of content?
Waiting with bated breath, Scott.
Thank you very much. All right, now again, this comes down to your obligations. So Catholic Super will help you as much as possible, but the obligations for Payday Super come down to yourself. And the key thing is to pay the super quickly. So reading this verbatim, you need to pay contributions within 7 days. The employees receiving, 7 days, the employees receiving their wages based on a new term, their qualified earnings. So ordinary times earnings has, well, till now been the definition of what you need to pay superannuation guarantee on. There has been a change to that, and it's called qualifying earnings, and we'll dig further into that. And the key thing there is the contributions must be able to be allocated, or a new word I think we will learn is the contributions must be allocatable. I'll say that slowly, allocatable. So you need to ensure that the data is as clean as possible to make the process work as quickly as possible. And there will be some improvements to help you, hopefully, reduce the issues you may have around making your data clean and allocatable. Try saying that quickly 10 times. Now, there will be a little bit of leniency for new staff or a fund change. So if a new staff or members that have changed their super fund, and that does seem to be one of the biggest causes for refunds and bounce backs, members changing their funds and not letting you know, the period is extended to 20 business days. And I'll reiterate that, 20 business days, not calendar days, 20 business days. So the real key thing is you need to make sure you've got good records. And under the corporations law, I think it's 7 years you need to keep your records to make sure that if there is an issue, you can provide evidence of what you have done. Okay, so new jargon for us all to get our heads around, qualifying earnings. Now, essentially, it's not too dramatic a deviation from ordinary times earnings, and it does include ordinary times earnings. But the other thing is now salary sacrifice. So historically, employers were able to not include salary sacrifice for calculations. So salary sacrifice is now part of the equation. Other pay items, such as performance bonuses and any commissions. Now, many of them may not relate to yourselves, so hopefully it will be simple. But the new the new definition for what you need to use to calculate your obligations is called qualifying earnings, or QE, just to throw a new acronym into the mix for you. And also you just need to qualify, there are some new definitions of an employee, not essentially too much different, but please make sure you're aware that you are paying the right people the right amount. All right, so Catholic Super provides a clearinghouse. So for a default employer of Catholic Super, we will offer the online Q clearinghouse for you. Now, it's a branded product of Westpac, so it's not our product as such. It is not a link to Catholic Super. It's a third-party provider. But what that does is helps you disseminate your payments to the multitude of funds you may have as efficiently and quickly as possible. Online Q is ready to go now. And the key message also probably is that if you're ready to go now, there's nothing stopping you waiting until the 1st of July. But one of the biggest issues is going to be the time taken, that 7 days when the clock starts ticking from the QE day, which is the day it is deemed you've made the payment of salary and wages. So any delays in transferring the money or submitting data is where you're going to be leaving yourself vulnerable. So Online Queue does have real-time processing using the OSCO Payday system. So if you've ever been to a restaurant and split a bill and had to pay your friend for your share and you use your phone, that's underpinned by the OSCO Payday system. Online Queue is ready to go with that now. It's real time to funds and also means that once you send the money to Online Queue, they'll be able to then pass on the data immediately to the receiving funds. Some of that is underpinned from a few more developments. We're awaiting some further enhancements, developments, confirmation from the ATO. And it's another new acronym for you to learn called the New Payment Platform, or NPP, which we are hoping to get some further confirmation updates on where it's at from before Christmas. Now, you do not have to use this OSCO payment system. We appreciate some of your banking providers may not offer or be able to accommodate OSCO. So we do have the 3 options through Online Queue if you're using Online Queue. There is the EFT, which most people have been using up until now. So you push the money. They have reintroduced direct debits. So direct debits were withdrawn from Westpac a while ago due to some other issues. They have now been reintroduced. If you do wish to use the direct debit, you do need to go through our verification process, and certainly the Catholic Super team can help you with that. But it's up to you what works best for you. The issue with direct debit is you submit the contributions and it clears overnight, so it does add a day to the processing time. Again, with EFT, it may add a day, or depending on your internal process, if someone needs to authorise a payment, it may add days to that 7-day clock starts ticking time. So all these options are available now if you use Online Queue. There's no cost to use Online Queue for Catholic super employers that we are the default fund for. So if you're not using that now, or if you are using an alternative clearinghouse and you're not sure if it will be ready to accommodate the Payday Super requirements from 1 July 2026, please talk to us and we will help you further. I will just pause there quickly. Is there anything that's come through quickly, Georgie or Kelly?
No, you're explaining things so well, Scott, that no one's got any questions.
Well, it's such an exciting subject for people like myself. So I've spent a lot of time trying to understand it. Okay, so the next part, the big stick, what's going to happen? So the penalties, it's really about ensuring compliance with looking after your staff, making sure you pay the right amount within a reasonable time frame so it does work for them. So if it's not paid in full, you'll then cop the super guarantee charge. So currently, if you miss a payment for some reason, there is a penalty. But it has been lifted up or uplifted a little bit. The bottom line is you're going to cop a penalty if you don't comply. How much it is will depend on how long it takes to rectify, and then obviously the number of issues. So it'll be based per member. So the idea is don't mess up, and we'll help you with that. The exceptions to the rule, though, there will be some leniency or understanding from the ATO. This has been a new process, and there's always going to be something that comes up. So new employees, obviously, there's a bit going on. You may not have all the right steps in place, going through the stapling checks if they don't have a previous fund, getting confirmation back from the new employee. So you now have 20 business days for new employees to get new funds set up and then contributions forwarded through. Payments paid outside the regular payment period. Now, where that applies, it could be if there's a back pay for some issue, and you have to put extra contributions through. If you have bonuses payable and they're not paid as part of the fortnightly pay run or whatever your pay run is, and there's additional lump sum payable, then you have got some further time. That's a little bit more complex, but you don't have to make sure it does align, and I'll go into a bit more detail about that. And then exceptional circumstances. So unfortunately, if you're in an area where there might be a natural disaster, there's a massive power outage in your region for some reason, something that is out of your control and is significant, there will be some lenience applied there. And with the big stick, the penalties, the ATO is going to take a practical compliance guideline. And realistically, it comes down to what your intent is and how well you are trying to do the right thing. And so I won't detail this verbatim. They're going to have a low risk. So that'll be just, you're making the odd mistake, or your payroll system hasn't quite punched out the right numbers for the person. There was a bit of a minor issue, and it's not regular and repeated. A medium risk would be where you do not meet the criteria to be in the low risk zone. So read into that what you want. But you've probably put steps in place to rectify it as soon as possible. And then high risk red is really those people that aren't making any effort whatsoever. So our aim is to help you make sure that you don't go ever past the low risk, and we will help you as much as possible to understand what you need to do to make sure that you can never fall into the orange or the red, because ultimately, as an employer of choice, you want to make sure you're looking after your employees and doing the right thing for them. So do the right thing. They'll be helpful. Don't try to do anything and don't change your ways. Watch out for the ATO. Okay, now I mentioned SuperStream and the new payments platform. From one end, it's your obligation to make sure that you then pay in alignment with your paydays, and you've got the 7 days. As you'll be aware, things don't always go right when it hits the super fund. And so there are some enhancements going on in the background as well from super funds and the underpinning legislation called SuperStream. Key thing is quick error alerts, and many of the payroll systems now will have a pre-member validation. So hopefully, before you get to the point of lodging a contribution and then it bouncing back once it gets the fund, through either your stapling checks in advance, or then when you're loading it in, there'll be a validation to say, look, this is not right, or something else is wrong. So you can fix it before you send the contributions through. The real-time payments, the NPP. So super funds must accept NPP payments by the 1st of July. And I'll cover off the bounce backs, but there are things happening at the back end from the super funds and the clearinghouses to make sure that you will then get maximum support to make sure things do move as quickly as possible. All right, so the fun stuff, the employee preparations. The first thing is really looking at what you're doing today. So if you are paying your staff fortnightly or even weekly in some cases, but you're not sending your super contributions through to monthly or quarterly, you will need to change that. So in many cases, you're going to have to go from 12 contributions to at least 26 fortnights in a year. Some financial years, you get 27 fortnights. So you need to plan for that, but also you need to make sure that your internal system, so depending on what your own internal process is, depending on how you process, if you have one person does it all start to finish, that will be okay. If you have some checks and balances in place, so if you have one person uploads the contributions, second person checks it, and then the third person has to then send the final go button, what lags and delays in the system is going to be there. So if you have people on leave, you have people stuck in meetings and there can be answer email prompts, you need to make sure you've got a robust enough system that you're not burning days in that 7-day window to get money through. So look at your process internal. That may mean that you need to review some of the, audit checks and balances. Do you give one person full access, but then to remove some of the eyes and scrutiny? Also the banking, who does the banking transfer? So in some cases, one person uploads it. If you have to put in some kind of payment requisition that needs to go through 4 people's hands before it gets paid, those payment processes might need to be reviewed. So then look at, are you going to use OSCO, or do you go to a direct debit, or do you go to the EFT and keep that up? But make sure you do that in a timely manner. Identify and rectify recurring errors. So I touched on it before. I think the most common error we have is people that change a fund and don't tell payroll. So they decide to roll over to a different fund, haven't given you the choice of fund form, and then you send the money through and bang, member not known. So certainly if you can improve your communication, we'll aim you there to make sure that people know what to do. And we can help you then work out what the consistent errors are, if it's something just you need to redress, so you can fix them up so you can reduce those errors. The third part is cash flow. So you are going to be making transactions more frequently. How's that going to impact your day-to-day cash flow? And the last part is the onboarding process. So getting the right information at the time of payroll is critical so you can get the processes done within the 7 days. So with your onboarding process, if you're not going through the stapling process to make sure that if a person hasn't given you a choice of fund form, you are paying to the right fund, or then getting the right default fund set up. If you need to review that, please talk to us. We want to make sure that this process is as seamless as possible, so you can get on with the other things you need to do. I'll just pause there, Georgie and Kelly. Is there any questions at this stage, or everyone's enjoying it and understanding?
There are a couple of questions. There is a question about central payroll and paying in advance of pay dates, so to enable time for holidays and things when payroll might not be at work. So just the question is, when does the super payment need to be made if they're bringing forward salary? Does it need to be made at the same time still, or will they wait until the pays actually hit the bank account?
Look, that's a great question. And that comes down to what is determined to be QE day. And we are still having a little bit of clarification sought. The interpretation at the moment is QE day, so the day the clock starts ticking is the day the money is paid. So if you're on holidays and the money is not physically paid into that person's account until the second fortnight of the holidays, at initial glance, but we will qualify this, that will be the next QE day. But if you are paying 2 weeks or 2 fortnights in advance and they are paid on that day, this is a simple assessment, and again, we will qualify, and so we'll take this on board, particularly for those shared services people or collective payroll groups. And I know this will apply largely in education this time of year, and apologies to those of you that have been taken away from paying off your end of year holiday pay runs and holiday and leave loading. So we will confirm that. But the interpretation at this stage is QE day is the day the money is paid. And there is some further ambiguity about paid or then received the member's bank account. At this stage, we're leaning to the date as paid by you, the employer, not received by the employee.
And just another one about returned funds. So if the funds do come back through the clearinghouse to the employer, how many days does the employer have to send that super back to online queue?
Now, this is something that is no real leniency. Bounce backs need to be back or allocable within the original 7 days of the QE start date. So if there is a bounce back or refund due to the fund not being able to allocate the initial attempt, the 7 days, the clock does not start ticking. So that's where it's important now for the super funds to be able to get the money back to you. So the onus is back on the super funds to get the money back to you and a reason why within 3 days. And then you have still within that first 7-day window. So that's not our ruling. That's the current legislation as we understand it. So you still only have the 7 days. And again, I will defer. There is the exceptions. So if you do have the off pay cycle payments or a new employee, so that's where it's important, perhaps part of the communication, to make sure that the staff are aware there is some changes happening. And again, we will help you with that as much as possible to say, look, super's something important. If you are changing, please let your employer know how that is done, because I'm sure you're all blue in the face from trying to do those processes yourself. But that's a challenge for all of us to make sure that we can try to help that out. But it is only that 7 days from the start of QE day.
There was just one more question about overpayment and rectification of overpayment of super, but I know that was a pre-submitted question as well, Scott. So there will be an answer for that one at the end.
Correct. Yeah, thanks, Georgie. So yes, I will address that, overpayments, refunds, in the question section. So all right, I will move on. Now, the next part is maximum contributions base. So there is a threshold on which an employee is obligated to continue to paying superannuation guarantee. As up until now, or up until Payday Super, been known as the maximum quarterly earnings base. So currently it's set at 7,500 per quarter. And so for those earning more than 62,500 per quarter, and I didn't do the maths, so it's at 130, so 260,000 per year. So you have a high income earner that's earning over $260,000 a year. Theoretically, you don't have to pay superannuation guarantee over and above that amount. Now, some people pay it regardless. That does come down to your own individual industrial agreements, awards, EBAs, or potential individual employment contracts. So in some cases, the agreement does not allow you to not pay more. So then it comes down to they're going to go over the certain thresholds and the individual has an issue. Now you are allowed to run, so from the 1st of July, the maximum contributions base, or MCB, another acronym, thank you very much, will be applied annually and as an aggregate. So if you hit that figure in, let's say, February 2026 for the financial year, or February in the financial year, you can stop that from February. So if the employer or employee, their total contributions of the year hit the 30,000 by February, you now can stop, as long as it fits within your industrial agreement, making the additional super guarantee contributions from that period. Now, where that might get a little bit tricky is then you're going to have, let's say, a couple of months in the financial year where that employee gets more cash in hand. From the 1st of July, the new maximum contributions base year clicks over, and then they'll have reduced pay. So you're going to start paying the superannuation guarantee again. So the employee may have reduced pay. So that's another communication issue. Hopefully it won't be a large group of people that it affects, but certainly in the education system, principals, deputies, some of the directors might be earning a good income. The healthcare sector, if you have high income executives as well. So that's something to watch out for, and we'll certainly keep communicating that one with you. All right, we're near the end and we will go to the questions. So further reading. So if you're not aware of it by now, Catholic Super has a Payday Super landing page or a Payday Super hub. We will be posting information on there as it comes to hand, qualification of information from today. There are links on there, and I think Georgie is going to post them into the chat now. So if you can't sleep at night one night, I certainly recommend reading the amendment bill in its entirety. It's a great way of really realising that you don't need to do all the work. Please talk to us and we'll help you as much as possible. Reach out to your relationship manager. So if you're not sure who your Catholic Super relationship manager is, there is a section on our website that says employer. You can click in and see the team. So as long as my lovely smiling face, you'll see the people such as Georgie, Kelly. So there's 3 of us based in Victoria. We have Colleen in New South Wales, and I know there's people from New South Wales. And if you can't find that through, there is a contact us form on that webpage where you can send a message and we'll get in contact with you, generally within 48 hours, but certainly reach out to your relationship manager. If you have any questions, it's our job to make sure that this is as seamless as possible for you. So thank you. Now I will go to the pre-prepared questions first. So some people did submit some questions in advance through the booking link. And then we'll go back to the free form questions. If you have to go because you are in the middle of a pay run, as I said, I'll try to get this recording through compliance so we can post it for you. If not, please check our Payday Super Hub or refer to your relationship manager, and we'll help you on the course to navigating this as simply as possible. So for those of you that are signing off now, Merry Christmas to you all. Thank you for attending, and I wish you and your families and all your colleagues and staff a safe and merry Happy New Year, where am I getting to? So thank you. But for those of you that have got some more time, here are the pre-prepared questions. The first one was any changes to STP reporting, so single touch payroll. Now, as such, we are superannuation specialists. Single touch payroll is not part of our remit. Certainly online queue does have some single touch payroll functionality, which if you're interested in finding out more about that, it's not supported by Catholic Super as such, but you can build it onto the same login through online queue. This is not a paid promotion, but if you need to know further, we can help you. So the key things about STP reporting is probably, firstly, yes, SG will now be calculated and reported every pay cycle. So not sure, but if you are uploading STP information every pay cycle, or if you can do it monthly, might need to do some homework there. That will be now done on a fortnightly basis or whatever your pay cycle is. So there will be updated STP and SuperStream reporting. You'll need to be aware of the new qualified earnings definition, so how that synchronizes with STP. I can't answer that. That's probably something we need to then make sure that we are working with you, so we'll understand what the new requirements are. So the left and the right hand does meet. And compliance monitoring. Because you're going to be submitting more frequent data to the ATO, their police can probably use that to either, one, work with you to improve outcomes, or if there are consistent ongoing issues, bring out the big stick. The second question we had was, do we need to change payroll software and bank transfer methods to CSF to accommodate the new Payday Super legislation? So one, I cannot speak on behalf of payroll software, so this is part of the communication and awareness. Is your payroll provider going to be ready? If not, ask questions. They should be, however, that's outside of our control. So if you haven't been hearing from them, start asking questions. If they are having forums, please attend them. If it's something that doesn't seem right, or this is probably outside of my remit, but if they are trying to then sell you other products and services, just be wary. They are companies that are there for profit. So, do you need to engage their services if you can then utilise us as a support and hopefully no cost. Payment methods. So I did touch on this before. Part of the 7 days QE day to receipt to a member's account is 7 days. If you are having delays because of financial transactions due to limitations, restraints, internal processes, you will need to revise that. You can still continue to use the electronic funds transfer where you push the money to us when you're ready. There are timing issues, so if it's done after 4 p.m, doesn't go until the next day. If you do a direct debit, which you can set up a direct debit now, where once you have it authorised, the direct debit is triggered. If it's done before 4 p.m, the day, it goes the next day. It does still consume at least 1 day in clearing times. You can choose the real-time immediate OSCO, but then that comes down to your internal processes allow for that, do your risk and compliance people like the sound of that, and also can your banking provider accommodate that? So you don't have to, but it comes down to what will give you the most peace of mind and also save that transaction time for that 7-day clock is ticking.
Just on that, Scott, sorry to interrupt.
No.
There was a question that said, what if the return happens in January when we are on leave? And unfortunately, it doesn't look like periods of leave are listed as an exemption at this point. But if there's anything else you can say about that one.
Look, I can't give a definitive answer now. If we look at it in a practical sense, is that an exceptional circumstance within the definition of a natural disaster out of your control? That's something that my answer would be no, but we'll certainly do some further research or investigation. That could be one of those things where, unfortunately, someone may need to be aware that they are monitoring. But again, we can't speak for you on that one. Our understanding is that would not be an exception. We'll put that in our list of investigations and keep you posted on that one. Any more on that, Georgie? Beautiful. The next question was, do you think you will be ready to receive the funds via the new payments platform by 30 June or NPP? Yes. I think the simple answer is that we need to be. Now, again, some of this stuff, we have an external administrator. We need to make sure they are up and ready. We believe they're going to start their real nitty-gritty in the new year. The SuperStream payment profile, new payments platform. Further guidance developments will be released by the ATO by December, well, before Christmas, sorry, we're already in December. So the simple answer is yes, we will. Really, we need to be. All right, the next question was, does super pay on the same day, or the same time as wages mean it's paid on the same day as the wages or within 7 days after wages are paid? So the definition, if you can't sleep at night one night and you do go through legislation, it is section 17A part 1, where really it says the subdivision applies if an employer makes a payment of qualifying earnings to or from on a particular day, the QE day. So our initial interpretation is it's the day the money is paid, is QE day, and that's the start of the 7-day clock ticking. So it's got 7 days to reach the fund after you make that payment of salary and wages. And the next question is, does contractor super need to be paid upon payment of invoices? So again, that comes down to probably with the QE day. So no definitive answer at this stage. This is part of our homework. But the literal interpretation would be, if you make a payment to a contractor on the payment of an invoice, the payment would then be the QE day. And so therefore, yes, you would. So the 7-day aligns with when you make the payment to the contractor, how that aligns with your pay cycle. And we did touch on the start, there is a new definition of who is an employee. But for super purposes, employee includes workers who fall under the extended definition of employees for SG purposes, such as independent contractors, sports people, and performers. Now, unless you're, well, shut up, Scott. I had a thought which doesn't really apply. All right, the next one. And a lot of this information, there is some links as well that will be available. So again, please, if you can't find it yourself, reach out to us. The next one was, is the pay date of payment of wages the official pay date for the purpose of the upload payment of the super file? We pay on Wednesday in advance of our official payday on Friday to ensure all employees have received it by the Friday. To that specific question, again, QE day. So if you are paying money on the Wednesday, although your official payday is a Friday, the current interpretation of QE day is it is the Wednesday. So paying in advance is a good thing. All employees like getting money in advance, but then does that open you up to some additional internal processes you need to review? Because QE day is the day for the start of that 7-day clock ticking. And all right, there was another question. Is there a way for employers to know if the payment has been successful? So this will apply to the online queue users particularly, and what might come out of the NPP about some further communication from SuperStream. But currently, if you use online queue, you can, in the settings, turn on a switch, and you'll get a notification when contributions have been allocated. So simply go to the it's administration menu. So if you are an online queue user, on the menu, so you've got home, online contributions, contribution files, funds, employees, etc. There's the administration tab. There's a preferences section, and there's a radio button there where you can click, and it says notification of allocation of payment turn that on, and then you will, in the future, start receiving some notifications when contributions have been allocated. Within that same menu, there is a preferences option, and it's a payment method. If you are considering changing your payment method, you go to the administration section of Online Queue. You can do that yourself. Change it to OSCO. It tells you a bit like with the EFT, the reference number. If you are considering going to the direct debit method again, you will need to go through a verification process, because the reason Westpac removed that under the anti-money laundering and counter-terrorism financing, they need to know their client. So there's a verification process for the bank to know who you are. You upload your details. They do a $1 test transaction. And then once you've been verified, you can use the direct debit process. But if you're not sure of that, again, reach out to your Catholic Super Relationship Manager. If you're not using the Catholic Super Online Queue clearinghouse, you'll need to refer to your clearinghouse provider to see what they can do to accommodate these kind of things. Near the end of the pre-submitted questions, with payments now aligned to the pay cycle, does that include payments completed as part of an off-cycle process? So I didn't take note who submitted that one, but good on you for doing a bit of research by the sound of things. So an out-of-cycle payment or an off-cycle payment would be an ad hoc payment. So if you have to do a back pay or a bonus getting paid in advance for some reason, it's not part of their normal fortnightly pay. If you make an off-cycle payment, there is a slight exception. Now, this one is a little bit confusing. However, you have an additional 7 days, or sorry, you can defer. So the example I have here is a person has a bonus payment paid on the 7th of December. Their next set of wages is not due until the 10th of December. You actually have until the subsequent payday or QE day to pay that. So this is a tricky one. I won't go into detail now, but if you make an off-cycle payment before the next payday, you may actually have an extra 14 days to make that payment. So watch your space. It's a bit of a confusing one. We're trying to put the exact detail into this comment presentation, but you do have a little bit of extra time for an out-of-cycle payment if you are making ad hoc payments. All right, any further questions there, Georgie, before I get on to the refunds questions?
Just one about staff returning from parental leave and having to back pay super guarantee.
Ooh, I am going to have to take that one on notice.
I thought we might.
Again, theoretically, if you're paying paid parental leave, no, I'll take that one on notice. I don't know the answer, and I'm not going to speculate and take up time.
Fantastic. Thanks, Scott.
All right. Then finally, there were a couple of questions about overpayments and refunds. And some people asked about doing negative contributions. So you overpay Scott Johnson one fortnight, but you realise you overpaid him. So you paid him $100, but the next pay, well, it should have only been $80. So the next pay, can you put a negative 20 or, and the simple answer is no. For the payments on any superannuation contribution upload file, you need to pay what's payable at that date. So you can't short pay the next one to claim it back. If there's a legitimate error, there is a process where we require you to submit a request to us. We also need confirmation that the employee is aware of the issue. So there is a template to send through to our administrator. We can supply further guidance, but certainly no negative contributions or no negative transactions. So particularly if a person has left your employ, you can't put a negative contribution to claim them money back. There's a process. It's a little bit more cumbersome, but we need to get approval. We also have to have audits to go through to make sure things are being done correctly. So please contact your relationship manager, or if you don't have a relationship manager, you're not sure, our service centre can be contacted, and the number's down the bottom there. Send through an email, and we'll help you with that process. But simply you need to give us the details, the amount that was paid in error or the reason why it was paid in error, if it's superannuation guarantee or salary sacrifice or one of the other contributions, the reason and the employee or former employee is aware that you are requesting this. We can't just go willy-nilly taking money out of people's funds because particularly if there's an issue going on, we're not going to get caught in the middle of that. So there was a couple of questions which are much the same about that. And I think I did answer the question. There was one question about requirements to return bounce back super payments. That does fall within the 7 days. So the super fund needs to get back to you within 3 days. You still have that 7 days QE day window to get the money through. So that is all the pre-prepared questions. Are there any other questions from the floor, Georgie, other than paid parental leave back pay?
No, I think there's a couple that have been taken on notice, including could we have a system where we can upload the file for a future date? Unless that's something that you've come across before, it's not a question that I've had.
No, there's nothing stopping it. I mean, ultimately, this comes down to the transaction. So QE day comes down to payment. Look, I might take that on notice rather than speculating and thinking out loud, because the noise of my brain tuning will get deafening. So we'll take that one.
Let's not confuse things.
Yeah, we'll take that on notice too. There could be some workarounds, but again, we want to be fairly prescriptive in what guidance we can give you without speculating. So we'll get back to you on that one as well.
Yeah, I have just tried to put the PDF copy of today's presentation in the chat, but it is giving me a big no on that. So we will endeavour to get you copies of the presentation. If you would particularly like one, please email us and we'll get that to you as soon as possible. But I did try and put it in the chat. It's just not working.
In the interest of efficiency, we will be posting that onto our Payday Super Hub.
Lovely.
So please, if you are after a copy of the presentation, go to our Payday Super Hub. It may not be there within the next couple of hours, but set yourself a reminder for later in the week if you're still going to be there, and check it. And if you're not sure, again, reach out to us either via your relationship manager or through the link on the employer section of our website, so www.csf.com.au, and go to the employer tab and scroll down and see the pictures of your lovely relationship managers, but there is a contact form there as well. And watch your space. So again, thank you very much for attendance. Thank you very much for your time. Hopefully we haven't left you too overwhelmed, but again, if that is the case, please reach out to us. And then Merry Christmas. So wishing you all a very merry and safe Christmas. Take some time off to relax, not think about work for a while, and come back in 2026 rejuvenated and excited about getting Payday Super ticked off your to-do list so you can get on with the other things you need to do on a regular basis. So thank you and goodbye.